Hi, Attorney Andrew Bethel. As an estate planning attorney, a large part of my practice when helping my clients plan their estates is to also keep in mind their tax exposure, not only at the time of creating the trust, but also when they pass away. This is especially the case due to estate taxes, sometimes affectionately referred to as death taxes. Today we'll be talking about a new change made by the IRS that only works in the taxpayer's favor. Firstly, a small disclaimer: estate taxes are assessed federally by the IRS and sometimes at the state level, meaning your state's laws will vary. Here in California, there is no state estate tax, meaning the California Franchise Tax Board doesn't get to dip into your estate after you die outside of your normal final tax return. Federally, however, the IRS does assess an estate tax, but only after an estate reaches above the lifetime gift tax level, which in 2022 is about $12.06 million and is tied to inflation, meaning everything beyond this point is only for those whose estate is going to be worth over this $12.06 million limit, which is a very small section of the population. Nonetheless, as we are in the realm of taxes, we are in the realm of politics, meaning that if it is politically popular enough, that number can always decrease and therefore wrap more of us within the class of those whose estates are subject to a dreaded estate or death tax. Thus, these are benefits to be aware of just in case. Now, to get into the details here, to put it simply, whether an estate will owe taxes is not determined right at the moment of death, but when it comes time to actually file taxes after the accounting is done. However, even that is not completely the case, as when a spouse dies, the surviving spouse previously had 2 years to determine whether estate taxes were going to be owed on the deceased spouse's estate. However, most of the time, this is in essence ignored and the surviving spouse receives everything from the deceased spouse's estate, tax-free, and continues on with their life. However, when that surviving spouse finally passes and their estate is worth over the estate tax limit, then the IRS is going to want their due. This is where the recent IRS change comes into play, and where you need to know about something called portability. Portability is the concept wherein a surviving spouse can elect to take or bring with them their deceased spouse's unused exemption along with their own. For example, a husband's estate was worth $10 million at his death, and it all went to the surviving spouse. By the time the surviving spouse died, however, her estate was worth $14 million, meaning estate taxes are going to kick in on approximately $2 million, right? Well, no, so long as the surviving spouse elected to take her late husband's unused exemption, which happened to be $2 million, and thus no federal estate taxes are owed here, and the children can inherit more from mom and dad without the IRS getting into the middle of it all. Previously, the surviving spouse had 2 years to make this election. Now, the IRS has increased this election period to 5 years, meaning a larger window of time to make the election in the hope that more money can stay within the estate at the end of the day. On top of all this, previously, to take this portability election, you had to request guidance from the IRS, known as a private letter ruling. Now, so long as you're within that 5-year window, there is no need to go to the IRS and ask, "Mother, may I take this election, please?" Now, you simply make the election by filing an estate tax return, something you were likely to do anyway, and now the only way to ensure you receive that portability benefit. So with all that, it makes it that much easier to mitigate estate or death taxes that might be owed, all while staying within the bounds of the IRS rules and guidelines. Again, while $12.06 million indexed to inflation sounds like a high number, this is set to sunset in 2026 and revert back to between $6.5 and $7 million. Of course, depending on who controls Congress and the White House at the time. Thank you for watching. If you enjoyed the video, be sure to check out some of our other excellent videos here. But don't forget, hit the like button, subscribe, ring the bell, and tell us what you'd like for us to cover down in the comments below.